The key question is that is this a one-off or rather a knee-jerk reaction on the markets, and the markets are likely to stabilize going ahead? What are the factors that could be at play? Let's try to decode that with Mr. Prashant Khemka, founder at White Oak Capital Management, joining us on the show right now. Very good afternoon, Mr. Khemka, and so good having you on the channel. Thank you so much for your time. Firstly, 50% tariff announcement on India. How do you believe that the investors will take it? Is it going to be just a knee-jerk reaction that we are witnessing on the markets, and are the markets likely to stabilize going ahead?
Hi, Shrishti. Thank you for having me on the call. Hi, Sneha as well. See, my assessment, market does, despite the reaction today and over the last few days, the base case expectation is that these aren't the final tariffs. It's more of a negotiating tactic. He's negotiating, remember, on two fronts, with Russia over the Ukraine war and with India on the trade talks. So this same arrow, if you will, he's using to hit two targets, using some leverage from this for the Russia-Ukraine as well. And this has been quite predictable in his behavior in the past. Also, if you see a pattern, whenever the negotiations come to final stages, he just ramps up what is at stake. And then he has no ego or otherwise problem in backing down. Yeah. So I hope and I assume that is the base case here as well. Over the case, he has given 3 weeks for the 21 days, I think, before this extra 25% becomes applicable. That also is an indication, in my view, that between now and then, we should see some further developments that would result in final tariffs that are well below the announced 25 plus 25. Having said that, there is some uncertainty, and that is what the market is reflecting right now.
Sure, Mr. Khemka. Hi, good afternoon. This is Snehi joining in the conversation. So I agree with your take on how we still have a little bit of a time before these tariffs are they come into play, and there is more room for negotiation. And also, given the fact that we have a US delegation visiting India later this month, give us a sense of what these negotiations could look like. Because when we had the first round of tariffs of 25% announced, we were operating with the assumption that this is the worst and things could progressively get better from here in terms of negotiation. On the other hand, you have Trump's comments on Japan where he's threatening to increase their tariffs. So this can actually pan out either way. What is your sense on where we are headed in terms of the next 3 weeks?
So as you said, Sneh, it can pan out either ways. But from here on, going by the pattern in the past that Trump has exhibited, it seems more reasonable to assume that we would settle back somewhere below what he had originally announced, which was 25%. Originally meaning a week ago or so, he announced of 25%. I doubt it would settle anywhere near at 50%, though between now and 3 weeks' time, we don't know, he might even ratchet up further pressure. But I think the way we are responding as a country, the negotiating team is responding with patience and keeping our interests at the forefront. Because even if you agree to something, let's say we signed a deal few months back, there's nothing to say that he would not, on top of that, come out with further tariffs. He could have, we could have agreed a few months ago, and he could have still slapped additional tariffs for buying Russian oil. He's done with other countries, with none other than Canada itself, adding additional tariffs at a later point in time. I think we have to give some more time, and we need to get used to some of this uncertainty. It is not easy. Obviously, the market can get used to it, but it's not easy on the individual sectors where it impacts the most. But that is the way last few months have been, and possibly for some time it could remain this way.
Well, indeed, a lot of uncertainty around Mr. Khemka, and even we were talking to some of the associations out there, and even they were highlighting that beyond a point, whatever number Trump's put to the tariff, it actually becomes viable to do business with the US. But saying that, Mr. Khemka, at this point in time, as an investor, what are you advising to your client, or rather as a manager, what are you advising them to do right now? Sit with whatever they have in the hand, be long-term, have a constructive view on the markets, or rather make some churning at this point in time, because select sectors are still questionable. What will happen to them?
Certainly. See, first of all, at the market-wide level, uncertainty should not be new to any investor. Yeah. Uh, Whether you look at it over the last 5 years, 10 years, 20 years, or longer, there's always been great degree of uncertainty at almost at all times, consistently and persistently. Just recent past, if you see, and we only remember the major ones, like the COVID, like the Russia-Ukraine war, and now the tariffs earlier in April and so on. But if you go back to between these events, there would be great degree of uncertainty as well. It's just that you tend to not remember them at later point in time. And believe me, few years time, you would not remember today. It would be lost amongst the major milestones or markers such as COVID and Russia-Ukraine war or so on and so forth. So this kind of uncertainty is normal at all times, though it seems like extremely high while you are living through those periods. Yeah. So in terms of portfolio, we remain fully invested. So your second question was whether we churn from one sector to another on the back of such announcements. The reality is, if you were to churn every time something like this happens, I haven't seen anyone who makes money doing that. Only people who make money are the brokers, because they get whatever brokerage in this. But investors, I don't think, can make money churning their portfolios on such news. Certainly not fund managers of any scale, because if you start churning basis such news, you'll completely drive the market against yourself with the impact cost. But even individual investors, I don't think, can make money out of such macro news. But what if tomorrow or next week or 2 weeks later, the tariffs are revised down to more acceptable levels, and then you'll have the reverse, right? And then you'll sell what you just bought today and buy the opposite. Yeah. So that won't make money, is our view. Stay fully invested and stay a balanced portfolio. Don't have just domestic names, just don't have just export oriented names. Have a good balance. Obviously, predominantly it would be domestic oriented names, because that's where bulk of the market itself is, bulk of the opportunities are, bulk of the sectors are. But we have, for example, IT services sector, we do have pharma, we do have chemicals, and some of those would be on pressure certain days, while others would do well, and then it would be the other way around another day. On the whole, the idea is to beat the market.
So point taken, and that's a good strategy to adopt going ahead, and be diversified, sit put where you are is the call coming in. But Mr. Khemka, what about some of our viewers or investors who have certain amounts of cash in their portfolio? Would now be a good time for India bulls to go ahead and buy the dip?
See, for me personally or as a firm, it's always a good time to invest. We never have a problem of having cash, because as soon as there is cash, we do invest. Yeah, and to the question that Shishi was asking earlier, if someone is deploying fresh cash today, as a fund manager or as a individual investor, and they just want to have lower volatility, then maybe investing in sectors or in ideas which are not impacted by tariffs could be a choice that you can exercise as of today. I'm just saying that churning, selling something, buying something, and doing the reverse in a few days because some contrary data point came, that would not make money. But for fresh money, I would still go ahead and invest. And if you're investing today and you want to either mitigate the risk, or you're already very exposed to these kind of names that are susceptible to tariffs, then maybe good idea to balance it with names that are not susceptible to the tariffs.
Indeed, but when it comes to deploying fresh money, Mr. Khemka, always a good time to go ahead and make some fresh buys. But it's the earning season as well, which is going through, but it always come to two questions. Are the valuations reasonable? And second, are the growth numbers looking that attractive to deploy that money? Help us understand that sectorally, where are you finding comfort in this market right now?
So valuations, I think, are very reasonable. They are at an average level. It's not like table pounding cheap or anything. Nobody can call, you only get table pounding cheap in with the benefit of hindsight. Because table pounding cheap, in hindsight, you realize that the risk factors that, like COVID or other such major events like GFC and all, which caused the markets to swoon very low, was temporary. While you are living through, it does not appear so. So I won't say that table pounding cheap, but by the same token, they hard to make a case, in my view, that valuations are expensive. They're very much in line with the longer term averages that we've had over the last 10, 12 years. Yeah, whether it's looking at historically relative to India on its own or looking at historically relative to, say, US or other such markets. So valuations are reasonable going back. Going forward, first let's talk about going backwards. Going backwards, we've enjoyed high teens kind of returns and high teens kind of earnings growth since COVID for the following 4 years, yeah, till 24. That was an unsustainably high uh, rate of return to be expected or earnings growth to be expected. It can last for a few years, but cannot be structurally expected to deliver those kind of returns in an economy that is growing at nominal GDP growing at low double digits. So if nominal GDP is growing at low double digits, it's reasonable to expect corporate earnings growth over extended periods of time to be more or less in line. For a few years, it can be different, but over 10, 20 years, it will more or less reflect the nominal GDP growth rate, which in India's case has been low double digit for nearly 3 decades now. And there's nothing to suggest going forward it should change. So I would expect nominal GDP growth rate low double digits and similarly corporate earnings growth to be low double digit. And in such an environment, expect returns from the market also to be low double digit. And that's true for the longer term as well as for the coming 12 months.
Realistic expectation to have from the market at this point, Mr. Khemka. But when we're talking about earnings, what's been your read through of the earnings season so far as we draw towards the end of it? If you take a look at how the Nifty performance has been, you have only 8 stocks out of the 43 so far that have reported below estimated numbers. Otherwise, everything else has either been a beat or it's been mixed to inline. So at first glance, it doesn't seem all that bad. So what's your read through of the earnings season and any positive surprises that you've seen this time?
I agree, Sneh. I think this quarterly earnings was expected to be muted. The earnings growth of some mid-single digit or so expected to be muted, and it's come more or less in line. As you said, 8 out of 30 has haven't looked at those final numbers, but maybe 8 have outperformed, maybe 8 have delivered somewhat lower, but nothing dramatic on either side. I think sectorally, if you see, the larger cap IT names have somewhat been weaker. In financials, though, the larger caps have delivered quite reasonably well. Yeah, and other sectors, not to go in each sector's case, but the overall earnings are more or less in line with mid-single digit expectation. And going forward, over the next 12 months or so, we expect that to inch up back to low double digit pace, not at the mid to high teens pace that it was growing till prior year, but back to low double digit pace, in line with the longer term earnings trend growth in India.
All right, but with this, Mr. Khemka, we let you go and really appreciate you taking the time out and speaking with us. Thank you so much for that.
Thank you, Srishti. Thank you, Steve.
All right.